Allianz, one of the world's leading financial services provider, today unveiled a new financial services risk trends report. The agency has reported identified key risks and loss trends for the global financial services industry, highlighting the impact of COVID-19, cybersecurity, climate change, and other risks on the insurance industry claims. Joining me to discuss the new report is Pauline Vacher. Pauline is a financial lines manager at Allianz in Paris. Good evening to you, Pauline. It's good to have you on the show.
Good evening, and thanks very much for inviting us for the launch of our latest report.
Congratulations for that report. So tell us a little bit more about this report, Pauline, and what are the findings in it?
Yes, so I would say that the main finding, as you can expect, are about the specter of the COVID-19 that is really hanging over the sector of the financial institution. We also, of course, have identified the cyber risk as a major and main exposure for any industries, including for the financial services sector. And of course, we don't forget all the compliance issues and all the surrounding of the ESG factors and climate changes, which have a great impact on the financial services sectors.
What are the specific risks and trends in relation to the COVID-19 pandemic, to be specific?
Okay. As the report pointed out, the current pandemic environment is seen as a major area of risk in this industry. You know that we are in the middle of a low interest rate, rising government debt, and winding down of support and grant loans to businesses. All this are really challenging for the financial institution. A large correction in the market, such as the equities, bonds, or credit, can result in a litigation from investors or shareholders. On the other side, we know also that the number of insolvency will increase in the coming months. And as you can imagine, this will affect also the balance sheet of the banks. If value falls precipitously, for example, it can make some customers or investors really unhappy. And if they are unhappy, then they will litigate. Furthermore, the rise in home working with weaker controls and oversight, together with the fast implementation of new technology, make the financial institution more vulnerable than ever, and especially to cyber incidents and internal or external fraud.
Yes, now you talk about the cyber security and risks. There are also what we can call the unintended consequences of new technology that we are now using. Just a year ago, 2 years ago, we were talking about Zoom, as it were. Now we do Cisco WebEx links, we do Zoom meetings and things like that. So are we seeing increasing threat here, and what risks are materializing, and what's the size of this in the industry, and how are they coping with it?
Yeah. So as you mentioned, this environment has evolved a lot since the last year, and since the 2 last years, I would say. And the cyber risk have also been identified in our Allianz Risk Barometer as one of the top 3 risks I would say, in all industries. And as you can imagine, the financial services industry is not an exception. The result is also mirrored with our analysis of more than 7,600 insurance claims over the last 5 years, which represent globally over $1 billion USD in value. And unsurprisingly, the cyber incidents ranks at the top cause of lost past value. At the start of the pandemic, we have seen an increase of more than 200% in the number of attacks. And we see that every day almost in the newspaper. Once again, financial institutions are not exempted. Despite having one of the highest levels of cybersecurity, they are attractive targets and they face various threats, as for the latest that we have seen, ATM jackpotting, ransomware attempts, and so on. Furthermore, there is also a seismic shift in the regulatory view of privacy and cybersecurity. So resilience and business continuity after a cyber event is a growing area of focus for our regulators. And the protection of the consumer data is really key. And that explains the large amount of the fine appointed by the regulator.
So why do you think legislation and regulation as part of the risk trends?
Yeah, indeed, there's quite a huge number of rules and regulation in the financial services sector. And this is really seen as a main risk trend. The DNO of the directors and officers of our financial institution are liable in case they don't comply with all the rules. And considering the diverse range of areas, this is a real exposure for them. Those new regulations are implemented in areas such as sanction, whistleblowing, data protection, cybersecurity laws, but also in the environmental, social, and governance area. For example, the law firm Herbert Smith Freehills have seen more than 170 regulatory measures globally since 2018. So you imagine the huge number and the huge exposure for the DNOs. And the risk is even broader for international entities which have to comply with all the regulation.
So part of the new focus is climate change, climate adaptation discussion. Companies are facing these issues. For example, you have banks that will have now to declare what is their resolution regarding financing of fossil fuel energy in many parts of the world. So this is becoming a mainstream conversation across every sector. Why is this important for the financial services industry? Pauline.
Yeah, I think we all realize that now we have to be involved in the climate changes. And even the investors want to have a great impact. So with this growing concern, climate change, but also social inequalities, environmental, social, and governance risks are receiving more and more attention from financial institutions, from investors, and also from regulators. Up to now, I would say that the ESG disclosure was more on a voluntary basis. Now, the investors see those information as key in the decision to invest or not. Furthermore, the climate change is also giving rise to litigation, which is beginning to include financial institutions. These cases have tended to focus on the nature of investment, although more recently there has been an escalation in the use of litigation by activists, advocacy groups, seeking to advance climate policies, drive behavioral shifts, and force disclosure debate. We have seen, for example, a good example of claim were the one sustained by the Commonwealth Bank of Australia. That was back a few years ago. And we see that the investors sued the bank over a proposed investment in a controversial coal mine. But then the claim was eventually withdrawn when the bank has increased its disclosure on the subject. We also can note that the banks are under strong pressure from environmental groups to withdraw their support of industry involved with carbon-intensive activities such as oil, gas, and coal projects.
Okay, very interesting report that we advise everyone to be looking out for. Thank you very much for speaking to us today on the day that you released that report at Allianz. Thank you so much. Have a pleasant evening, and thanks for speaking with us, Pauline Vacher, Financial Alliance Manager at Allianz in Paris.